Everybody seeing this?
Yep. Yes.
How's that? Everybody see that well?
Very good.
Okay, awesome. So without further ado, Pamela Anslinger.
Thanks. So we are with NeighborWorks Northeastern Pennsylvania, and the first couple of slides, we just kind of do a little bit of an intro of who we are and why we exist. I joke and say we're one of the kept secrets, best kept secrets in Northeastern PA. So in Northeastern Pennsylvania, NeighborWorks operates as what's called a 50c3 nonprofit. So that just means that we fall into this really cool tax bracket that lets us to not have to pay as many taxes. It's not going to sugarcoat that. But more importantly, it's a nonprofit's purpose is that we don't have working capital. So what that means is in order to be a nonprofit, you have to take any proceeds or any money that you have and reinvest it back into the community. So we never roll over fiscal years with millions of dollars on our books because we're not allowed to keep that kind of money. It has to find a way to the community. Our way of doing that is we work with neighborhoods and government offices and cities to try to pull resources together, and then we implement programs that will hopefully help people to be able to attain stable housing and of course empower residents. That's really our goal, is to help people be community members within their neighborhoods. So NeighborWorks Northeastern Pennsylvania, the reason why we have the NEPA attached to us is because NeighborWorks is actually a nationwide nonprofit organization. So there's tons and tons of nonprofits all over the US, and you'll notice that there's a really big grouping throughout the East Coast, especially in the Northeast section of the United States. And that's because NeighborWorks was actually founded in Pittsburgh, Pennsylvania. And then it just kind of boomed into more urban areas and then has kind of gone national over the many, many years. And we're actually recognized by Congress, and there's an entire weird little section that happens down there that runs our rules. And that gets a little bit out of me, not gonna lie. So a couple of the programs that we do is, I always say we're an educator first. So we offer financial education and homebuyer education. So what we do in that arena is people come in and they're like, I want to buy a home. And we're like, fantastic. But obviously there's something that is either holding you back or preventing someone from being able to take that step. So the first thing we do is we work with them to do an analysis of their finances. And we say, you know, what could potentially stop you from being able to get approved for a mortgage? And then we work with them to resolve that barrier. So we do free credit repair services, debt reduction strategies, savings planning, student loan programs. So we align people with the right stuff. Side note on student loans, that is probably one of the biggest predatory practices I still see, is people becoming victims to programs that aren't real. I actually had a client last year that was convinced that she was in a student loan forgiveness program. She had been paying this company for almost 3 years, and on her credit report, her student loans have been in default for probably about 4 years. We have no idea where this money was going. We tried to kind of backtrack it, but it was like an automatic wire transfer out of her bank account for years. And that was really hard. That was really hard for her, because then here she's thinking she's doing the right thing. It's helping her credit. And then we looked at it and, you know, she had a lot of work to do, and there really wasn't a lot of recourse for that situation, unfortunately. So it really helps to work with places that are able to kind of do that full assessment. And then we also work with homeowners that are either struggling or behind on their mortgages. So in that arena, we do a foreclosure intervention program. We are court-ordered, court-appointed advocates. We work within the county judicial system to mitigate that process. Obviously, if somebody is struggling with their mortgage, they most likely can't afford an attorney. So that's why we help to support them and try to work out retention options. I will be honest, I've been doing that work for 5 years, and I've only ever had one person not keep their home and go to foreclosure sale. And not COVID related, but we usually average about 75 clients a year in foreclosure. COVID has definitely made that a little different. Some other programs outside of my area is our property acquisition and redevelopment. That's where we acquire just horrible properties. Not even gonna lie, the properties that even investors don't want. So banks have actually donated properties to us that they just had sitting on the market for 2 years and investors didn't even want to touch it. But we leverage grant funds and government funding to be able to rehab those properties. And then we sell them to first-time homebuyers. So it's a nice work, full service that we get to do there. We also have an aging in place program. That's for anybody over the age of 60. We do volunteer work where we align volunteers with older adults to do some home maintenance projects. It could be yard work. It could be painting, which you can see in one of the pictures. We have a lovely young lady scraping some paint, and decluttering. So again, just kind of taking that time to help our older community members stay in their homes safely and with dignity. And then we have neighborhood revitalization. Currently, we're focusing on West Scranton, and that's a little bit more of a bigger picture program line where we look at businesses and parks, and we kind of pull all the community members together, and we leverage funds to be able to do some of those improvements. We did a really cool study in West Scranton, and one of the biggest complaints was street lighting. People were afraid to walk down the street after dark because they couldn't see. And then also, street lighting is a deterrent to crime. So people are like, my alley's too dark and things like that. We were able to take that information, go to the city and say, lighting, like that would make a huge impact. And it was something that we were able to really bring to light. So, so it kind of bringing it back to housing counseling and why we exist with down payment assistance programs and the services that we do. So HUD is the branch of the federal government that determines housing counseling. So a part of being a nonprofit is we are also federally regulated. So most of you guys are probably familiar with the Department of Housing and Urban Development because they oversee your fair housing laws. We uphold these as well. And just to kind of give people an idea of how this works, HUD oversees FHA lending, as I mentioned, fair housing, rental programs, and also our programs. Pennsylvania State is PHFA. That's the Pennsylvania Housing Finance Agency. They offer different loan products that some of you guys might be familiar with. They also oversee some of the grants, and then they also provide funds and guidance on how we also run our programs. So that's kind of the trickle down effect that I like to call it, and it all comes to fruition with us and the programs that we run. So in order for us to do the services that we provide, we do have to actually get fully certified personally, not just organizationally. So I had to do many trainings and get different certifications. And the reason why I include this on the presentation also is because it's really important to just know that when you're working with a company or an agency, you're confident in what they're doing. So we have to know everything from tenant landlord disputes all the way up to foreclosure and everything in between. As I mentioned, so I'm not going to spend too much time here. These are the main services that we offer on the education piece. So we do the financial coaching, and then we also do the homebuyer education. The homebuyer education course that they take either in person with us or online through a third-party company ends with getting a certification that they then can take and use to apply for assistance programs or certain types of mortgages. So what a lot of people don't realize, and I'm sure you do, many mortgages require a certification and showing that you've had the education in order to get that mortgage. A lot of those mortgages are what we like to call your first-time homebuyer mortgages. They're your home ready mortgages with Fannie Mae, home possible with Freddie Mac, your PHFA loans. So a lot of times people come to us and get the education and they then might not even get assistance. That's where it's really important to kind of know that even if we're involved, we're not always giving people funds to be able to purchase the home. This is a slide just kind of quantifies some of the impacts that we've had. So over the last 5 years, we've assisted over 300 clients purchase a home. On average, from our financial education clients, we have had people save almost $5,000 by reducing debts. An average credit score increase of 58 points per person. And then they also have an average savings increase of over 4,000. Some demographics on our clients. A lot of our clients actually are female. A lot of them are also single parents. And most of them fall between the 25 to 35 range, and then also 36 to 30 or to 45. So I'm sure this is probably a lot of the same clients that you guys work with as well. So homebuyer assistance program specifically. We personally administer and run the City of Scranton Homebuyer Program and the Lackawanna County Program. The City of Scranton program is really, really well funded. So what I will say is a lot of times your assistance programs, as the year goes on, the funding goes away. So, it's really heavy. There's a lot of funding flying around in the spring and the summer, and usually by the time fall hits, not a lot of programs still have any funds left, and then you're waiting again till the following spring for those sources to come back online. The City of Scranton program, we've been running it since the beginning of 2020, and we have never run out of funding. When we started to kind of wind down, we went back to the city and we said, look at this impact, look at the effect that it's having on people's ability to purchase affordable housing, and they chose to immediately release more funds to support it and continue going. So some of that is we've had 32 closings so far, and of the 32 closings, we have put out into the community almost $350,000. So a couple of things to keep in mind is this funding comes originally from HUD. So HUD is a federal entity and they love putting requirements on things. So it does have to make the right sense, and it does have to fit for the right person. So there are some income limits, there are some purchase price limits, unit restrictions. So multi-units, there are some restrictions around that. And there is an inspection requirement. The last piece is that the awards are on what's called a sliding scale. So HUD basically says we can't standardize. We have to take everyone's situation into consideration. So we can't just say everyone gets $10,000. So that was our biggest challenge when we were designing this program, was how do we do that? So we came up with this process. We have eligibility, commitment, approval, and award. So eligibility is just saying the person is eligible for the program as far as initial look. So we kind of align this process a lot with the lender's process. So if you first think about it, when you go and you sit down and you meet with a lender and you get your pre-qualification, you really are getting something that's solid, but it's also contingent to a few other things falling into place. Your commitment is really what happens when we reserve the funds. So when we have somebody that comes in and they apply for the program, we're going to first say, okay, based on your income, your household size, you're eligible for the program. But we're not going to reserve funds for you or guarantee that they're going to be there for you unless you can show that you can get approved for a mortgage. So that's our trigger. When somebody shows us that they have a pre-approval with a lender, we will then take a chunk of money and set it aside for them. We do that because we recognize that we don't want people to just rush and buy anything out of fear that the funds won't be there. We don't want anyone to stress or rush into something if they're not ready. But we also can't just reserve funds for everyone who applies, because right now we have over 20 people that have applied and haven't taken the next step of getting the pre-approval. So if we were holding up funds for everybody, we wouldn't be able to take any more applications. So that's kind of our trigger point for that. Once the approval happens, once we get a sales contract. So that's when we're saying, okay, you are approved for the program. We're verifying that the home meets the purchase price requirements, the unit restrictions are in place, and we're able to say you are approved and this money is definitely coming to you. We issue the award amount also at that point. That's when we are working with the lender, we're verifying that they can accept the program. We're talking through numbers, and we're then issuing an award letter with the monetary amount that they're getting. So a couple of things to keep in mind is the income restrictions are updated each year. They usually come out in January. So what you know when you first start the home buying season is going to change in January. This year, the income limits went up. So we also keep close track of that because we were able to kind of go back a little bit, and for people who had applied and they weren't found eligible, we were able to reach out to them and say, hey, you know, have you found a house yet? We know you applied a month or two ago. They might say, no, still looking. And we're going to be able to say, hey, why don't you do the application again? The income limits went up and we want to make sure, but we think we can get you approved. Some other pieces is we also require at least $1,000 contribution to the purchase. This can come in the form of the earnest money down, the appraisal, or the inspection. So we really we want people to have a buy-in, but we also made it really, really easy for somebody to be able to do that. And then because we're giving them a larger amount of money, we also want to see that they aren't going house broke. So with that, we kind of follow the USDA rule where USDA requires, because they do 100% financing, they require that somebody have 2 months of mortgage payments in savings at closing. So we want to see that as well. And that's the trade-off there, right? We're going, hey, here's a bunch of money, but we want to see that you still have some. So that way, you know, if your sewer backs up 6 months in, you're not scrambling to figure out how to pay for that. And then assets. If somebody has $30,000 cash sitting in their bank account, I don't know why they're applying for our program. I'm going to be honest. But the cap on assets is $30,000. But we do not take retirement into consideration there. So obviously we want people saving for retirement. And if somebody has funds in retirement that exceed that, that's okay. The reason for that is because that's not considered what's called a liquid asset. They can't just go to the bank and pull that money out. And again, we also don't want people to have to pull money out of their retirement to purchase a home if they qualify for something like this. And then lastly, applicants do have to be US citizens or permanent residents. So we really follow FHA lender guidelines on this because they are the ones that are going to be issuing the mortgage requirement. So we kind of just follow whatever their rule is. So there are some restrictions. Obviously, if somebody's working on like a temporary visa and it's up in 6 months, a lot of us are going to be like, hey, why are you buying a house? So we just kind of follow along with FHA and what they say the rules are around residency. So homes obviously have to be located in Scranton. That sounds really silly, but I cannot tell you how many times people have called me and they're like, so for the program, do I have to buy in Scranton? Like, yeah, it's called the City of Scranton program. The funds come from Scranton, so we do have to make sure the home is in Scranton. And then for the units, you can see that there is an option to buy multiple units, and the purchase price limits increase with that. New home construction is also an eligible cost, but that will increase as well as the units go up. This actually did just update this year as well, which is really exciting because it used to be like 135,000, and this year it jumped up to 156. So I'm happy that it followed the market a little bit. I'm a little sad that it's still at 156 because obviously even in Scranton, property prices have definitely gone up, but this at least is a little bit more competitive than it was when the market was on a fast trajectory, and obviously we only update once a year. So a couple of information on the unit piece. So the way this works is we can only fund for the unit that the person is living in. So easy way to explain this. If you're buying 2 units and you're eligible for $10,000, you're going to get $5,000. We're basically subsidizing the unit that the applicant is residing in. If it's a multi-generational purchase, because that is becoming exceedingly more common, a mother and a daughter, 2 sisters, 2 friends, if they are going to occupy the house together and it's not going to be used as an investment unit, then we would have the 2 people apply to the program together, and then they're both being awarded the total funding amount. Does that make sense? Yes.
Yeah.
Okay. So we want to make sure that people have the ability to use the program, and we're not afraid to change things if we're running into issues. All right, so inspection is usually the biggest roadblock. I'm not going to lie. So unfortunately, we do have an inspection requirement. What we do for anyone when they get approved, though, is we give them a copy of the inspection checklist that the inspector is going to show up and use. The reason why is because we really want you to look at the property, and we also encourage and give these to realtors as well, because that's going to give you the ability to walk through and say, hey, before this inspection happens, what needs to get addressed? What's on that checklist? The most common reason that someone fails an inspection is because of smoke alarms and carbon monoxide detectors. And that is a really silly reason that drives me nuts. So sometimes there's other things that are found, of course, but it helps to be able to do that. The inspection is similar to an FHA inspection. So if a property does say on it that it's, approved for FHA financing, most likely we're not going to have issues. There are some differences though, because at the end of the day, the inspection is actually a code inspection from the city. So it is looking for code violations. So it might pick up things that FHA does not look at, but it also might overlook things that FHA does. But they are kind of similar, so that's a good way to relate to it. Also, that is at no cost. So the city pays for those inspections. That's also part of the reason why we want people to pass on the first try, because we really don't like having to pay to make that person go out multiple times. Okay, so everybody always wants to know, how much assistance can someone get? So I'm going to make this really easy. We can't tell you until you buy the house or until you pick the house, because it's based off of the mortgage amount. We, again, have to take everybody's finances into consideration differently. So the sliding scale, we do a minimum guarantee of at least $5,000. So that way it's impacting that purchase, the down payment and closing costs. And it goes up to $15,000. The math that we use to do this is similar to a debt to income ratio. So we do calculate out how that monthly mortgage payment is going to impact the homeowner's monthly finances and budget. So with that, what I will say is the calculation is typically 10% of the purchase price. So if someone is buying a $110,000 house, they're usually getting $11,000 award. And we go in intervals of 5 just because it makes our accounting department happy. So if someone is buying $11,500 house, then we're going to give them, $110,500. I'm deducting the zeros in my head and I'm not saying it right. But they would then get $11,500. And if it's something in between, again, we just roll up to the nearest 5. And that is some of what I just said. So it goes in increments of 5 and it's a sliding scale. And at the end of the day, the only time, and we've never run into this issue, but little disclosure statement, we do get documents from the lender before closing to verify that the information that we have is correct. So if we ever have a situation where it is discovered that somebody has intentionally misrepresented their income or their financials, that would be the only way somebody would get to closing and not be able to have money. And simply enough, we've never had that happen, but that is a possibility. We are going to do a checks and balances.
So
Um,
can I ask a quick question? while
Yeah,
we're
sure.
on? Suppose they're awarded $11,000.
Mhm.
Closing costs, prepaids, everything all together, only totals 9. Are they able to use that 2,000 for additional down payment then, or
That's exactly it.
Okay. They can't get cash back, correct?
Nope, they can't get cash back.
Okay.
And that's part of the reason that we do offer a higher amount than some other down payment assistance programs, because we want to see a higher down payment. Just
Okay.
because you can do 3, we both know that when you have a higher down payment, that reduces the mortgage insurance,
Right. Mhm.
impacts the interest rate. So our goal is to get that monthly mortgage payment down as much as possible.
Okay.
Also, these programs like Seller's Assist, things like that. So if you're layering in like a gift of equity along with this program, you're going to have very minimal cash out of pocket for a home buyer.
Okay. Thank you.
Any other questions on the City of Scranton program? I'm sorry if I'm going fast. I don't mean to.
It's fine.
Lackawanna County is really, really easy to explain. We get enough money for 15 people each year. Everyone gets $7,500. And the income limits are higher than the City of Scranton. So if we have somebody that applies for purchasing a home in the city and they are above the Scranton program but below the county, we can roll them into the county program. There's no locations. I've had that question where people are like, oh, well, I'm using the county program. Can I buy in Scranton? If they're above the Scranton limits, then yeah, absolutely. We had 2 situations last year where the house just couldn't pass the inspection. So we did make an exception and rolled them into the county program. Obviously, the county we want to be able to target and use outside of the city as much as possible. So if somebody can go city, that's really what they should be doing. So again, the homebuyer education course is required to be able to apply for this program. Income is 100% area median income. So that's the City of Scranton is the 80% cutoff. The other thing I'll mention is that these programs are also adjusted gross income. So if people have deductions to their income, they might think, oh, I don't qualify because I make $55,000 a year. But if they're putting $5,000 a year into an IRA and their adjusted gross income is actually $50,000, they would qualify. The purchase price is $200,000, so it's higher than the City of Scranton. It does not have an inspection requirement. So we just ask for a copy of a private inspection. We want to see that somebody is familiar with the house. Though we don't have requirements, obviously, if the home is like imploding on itself, no one should be buying it. So we haven't really had any issues with this. We had a couple people come back and say, oh, I've lived in the house for 5 years. I don't want to pay for an inspection. I have an FHA appraisal. We'll take that instead. We'll look at the FHA inspection or appraisal as well. And then the other piece to this is there is a lien period. So if somebody is getting the county or the city program, we are going to put a secondary lien on the property. If somebody is doing the type of financing that there is already a second going in place, we would fall to third. We don't really care about the position. The main thing is that the program, the whole purpose of it is that we're creating, owner occupied residency within the community. So we want to make sure that somebody isn't using this program and then, selling in a year for a profit. So the lien is just there so that way we get notified if somebody does go to try to transfer the title or sell the property. Easy math, if somebody got $5,000 and they chose to sell the home after 3 years, they would have to pay back $2,000. So it basically goes away, that second lien, after the lien period. But if they sell before that, they would have to pay a portion of it back. So the process that we have put in place is everybody starts with the homebuyer education program, and then they submit the application. They get notified with a letter that they're eligible. We then have a one-on-one meeting with them where we go over the rules of the program. So that's where we'll go over the checklist. We go into some more details on the lane information. That way people are aware of what they're committing to and how it's also going to impact their shopping period. Because these programs do, we try to make it as user-friendly as possible. But as you guys know, sellers, you know, if you're submitting an offer that somebody's waiving inspections and then all of a sudden we pop up with one, that causes problems. So, you know, we want to make sure people are aware of that so that way they can do competitive offers, but also make sure that they're not setting themselves up for some issues later on. We then work with the lender to get the approval done, reserve the funds. We pass the inspection with the City of Scranton program, and then we cut a check. And that's where everybody likes us. So last thing that I always like to touch on is we run 2 programs, but there are many other ones out there. And though we don't formally run those programs and administer the funds, the education course that we do is still required for people to go and apply to them. So there's some lender specific programs, location specific, income specific, and a list of some of the ones outside of the ones that we do is the PHFA K-FIT program. So that one is a little different. It's statewide, and it's a really cool program that Pennsylvania State started offering that they do 5% of the purchase price. The income limits are also a lot higher with that one. So sometimes we have people come in, we see, you know, they're applying, they're a married couple and their income's on the higher side. We can then recommend that they look into that program. First Front Door is another program. That's one that gets hit fast and hard and dries up quick. So usually that one comes online at the beginning of the year and then it's gone by June. And then we actually cover multiple counties. So we do see a lot of volume out of Monroe County. Monroe County has its own down payment assistance program that the county runs. But again, we offer the education and the certification for them to be able to take that and go apply to the county for that program. And that's where we really like to hit home on the education. I'm going to skip over this one because this actually was a lot of what I just said on the other slide. These are the other programs. These are some of the highlights. And then of course, other banking institutions can sometimes promote and create their own as well. So it's important to be aware of that and keep your, you know, your options open. For the education course, we are back to offering 2 options. We have the web-based and then we also have the in-person. If anyone ever wants to come and speak at our in-person one, we offer lenders, realtors, inspectors, and they do a presentation on the services and your role in that home buying process. And we can definitely talk offline about that. And then if you have any questions, that is our information. I'm not gonna lie, I don't have a clock in front of me at all. So I don't know if I'm going too fast or too slow right now.
That was great.
But if anybody has any questions, please don't hesitate.
I'm gonna drop the share down.
Go for
right?
it.
Drop the share down real quick. See if we can get back in the view here. Are we back, guys?
Yep.
Awesome. Awesome. Any questions, Laura?
I'm good. I think it was very good information. You did a great job on that presentation.
Lisa, any questions?
No, I'm good. I'm good.
Yeah, I thought it was terrific. I mean, I really
Thanks.
appreciate you taking the time. And, you know, ultimately, I'm going to say this for the benefit of those that may be watching this from a recorded standpoint. I know the contact information for Pamela was in the last slide there, but I'll also put it in the description of the video. So this will probably live on YouTube. So I'll have that information in the description of the video, both contact information for myself as well as Pamela. So if you're watching this and you have some questions, anything that wasn't addressed, I'm sure not a problem to email you.
Yeah, not at all.
So not a problem to email Pamela directly or to reach out to us, and we're more than happy to help. But yeah, that's all we have. Again, I just want to say thank you for coming today.
Thank you.
Really, really
Can
informative.
I say one thing before we cut
Yeah.
out?
Yes, you can.
Just keep in mind, not every lender will accept these programs. Benchmark will, and we've already had everything approved So just a little, sales pitch there.
Yeah, I take
Yeah.
that plug all day.
Yeah.
I'll take that plug all day.
Yeah, definitely.
Really good point, and I appreciate that. So we do have a preferred partner program. So if anybody is curious on how to get these programs approved, we also recognize that. So for realtors that want to be a part of that, definitely follow up and we can add you to our website and get you some information.
Okay, awesome.
Sounds
right.
good.
Thank you so much.
Thank
Appreciate
you
it.
so much. I appreciate it.
Thanks, everybody. Have a great day. Enjoy the long weekend.
You too. Thanks.
All right, bye-bye. And